Dinar Shift viewers, welcome. This broadcast is arguably the most crucial you will ever encounter if you are a holder of the Iraqi Dinar or the Vietnamese Dong. The information we are sharing today directly addresses the decisions that could shape your entire financial future during a significant currency event. Picture the moment the long-awaited currency revaluation (RV) occurs, exchange rates go live, banking institutions become instantly overwhelmed, and a torrent of information, both accurate and misleading, floods social media platforms. In this environment of intense excitement and potential chaos, a single, impulsive misstep has the power to jeopardize the financial security you have been patiently working toward for years. Our focus today is a detailed breakdown of 6 critical errors commonly made by currency holders during the exchange phase, mistakes that have the potential to utterly destroy not only profit potential but, perhaps more significantly, personal peace of mind. This is not a discussion centered on speculation or conjecture. It is a presentation of practical, necessary information that must be fully absorbed and understood well in advance of the day the exchange window opens. We strongly advise preparing to document these points, as the wisdom contained within the next segments is designed to safeguard your anticipated future assets. Our objective is to ensure you are not among those who, due to a moment of unprepared excitement, experience a devastating loss. Before we delve into the specifics of these 6 common pitfalls, it is essential to establish a clear context. The prospect of a revaluation for both the Iraqi dinar and the Vietnamese dong has fueled years of exhaustive discussion, intense debate, and deep anticipation among a global community of holders. Individuals across continents have dedicated themselves to waiting, strategizing, and preparing for the instant everything potentially changes. However, the reality of this moment, when it finally arrives, will likely be anything but tranquil or slow-paced. It is expected to unfold rapidly, triggering profound emotional responses and creating an overwhelming atmosphere of activity. As new exchange rates are announced, banks will likely face unprecedented levels of traffic, and unverified information will proliferate rapidly across all communication channels. This is the precise juncture where raw human emotion, including profound fear, unchecked greed, momentary panic, and intense excitement, takes control. These heightened emotional states are the primary drivers of poor, destructive financial decisions. Therefore, the purpose of this comprehensive guide is not to offer timelines or rate predictions. Instead, it is centered on robust defensive strategy, equipping you with the knowledge required to effectively shield your new capital when the environment around you begins to spin rapidly out of control. The first critical error: impulsive rushing to exchange. This is the most frequent and potentially devastating error, capable of neutralizing years of dedicated preparation. When the revaluation moment is confirmed, the immediate, powerful urge will be to act instantly, to gather your currency and race to the nearest bank teller before the masses arrive. This reaction is understandable. It stems from years of anticipation, observation, and dreaming about this specific day. Yet, allowing this emotional, panicked impulse to guide your first steps is precisely how investors surrender potential value. The introduction of new exchange rates is typically executed through structured, deliberate phases. There may be a period of several days or even weeks before the official and final exchange window closes. The very first hours of this period are often characterized by internal system updates, potential confusion among banking staff, and sometimes even temporary rate variations between different financial institutions. Charging toward the first available teller could result in accepting a suboptimal rate, dealing with an inexperienced representative, or inadvertently signing documentation that you later deeply regret. The critical advice here is to pause, take a necessary breath, and wait for officially verified, public updates. In matters of finance, considered patience consistently yields greater rewards than panic-driven action. The composed and well-informed always secure a better outcome. The second critical error: reliance on unverified sources and private groups. This particular mistake carries genuinely hazardous and potentially financially catastrophic risks. As the prospect of a major currency event intensifies, a predictable surge of fraudulent groups and unscrupulous scammers will emerge. They operate by making compelling yet false guarantees of elevated exchange rates, accelerated access, or specialized contract deals that require you to transact through their organization. These entities may employ convincing language, present themselves professionally, and even use counterfeit documents or well-known corporate logos to establish a false sense of legitimacy. The stark reality is that once you surrender your physical currency, or, equally damaging, your sensitive personal data to an unauthorized party, those assets are almost certainly lost forever. Your exchange transactions for dinar or dong must only occur at officially recognized, fully licensed, and tightly regulated banks or exchange centers. This means engaging exclusively with major, reputable financial institutions that are unequivocally connected to established government and treasury oversight systems. You must never entertain offers that appear too good to be true. If you are being aggressively rushed, asked to pay upfront fees, or promised secret, insider access, you must immediately withdraw. Genuine, enduring wealth is built through cautious, smart decisions, not through chasing promised secrets. The third critical error: the absence of a detailed exchange plan. Attempting to walk into a bank on the day of revaluation without a comprehensive, predetermined strategy is equivalent to entering a high-stakes competition without adequate preparation. You are simply not ready. Before the revaluation takes place, you must dedicate the necessary time to formulating a robust exchange strategy. This strategy must define the exact amount you intend to liquidate immediately, the portion you plan to retain, and the specific types of bank accounts or financial instruments you will utilize for the proceeds. During the exchange, you will likely be presented with a range of options: a straightforward cash transaction, a fixed-rate contract designed for large volume holders, or various long-term deposit arrangements. If you lack a clear understanding of the differences between these options, you risk unintentionally agreeing to terms that unduly restrict your financial maneuverability and control. Determine your clear objectives beforehand. Give careful consideration to potential tax liabilities, your future investment goals, and your personal tolerance for financial risk. Thorough preparation significantly reduces the likelihood of being manipulated or confused by complex offers. Entering a bank with genuine preparation and well-defined confidence is your greatest asset. Relying on mere luck is not a viable strategy for building lasting wealth. The fourth critical error: disregarding tax and legal compliance. This particular oversight is one that can erode your capital long after the initial euphoria of the exchange has subsided. Many currency holders mistakenly believe that major currency exchanges are exempt from taxation or that government agencies will not track such significant transactions. This is a critical misconception. In the vast majority of jurisdictions, any substantial financial gain resulting from a currency exchange is legally classified as taxable income or a capital gain event. Consequently, a failure to properly prepare for this reality could result in a significant portion of your new wealth being consumed by unforeseen tax obligations, or worse, lead to serious legal complications. The mandatory course of action is to secure the services of a qualified tax advisor or a specialized financial planner before you proceed with the exchange. You need to consult with them regarding legal financial structures, such as trusts, business entities, or specific investment vehicles that can legally and prudently help minimize your tax exposure. It is also imperative to meticulously document every step of your exchange process. Do not attempt to conceal the transaction, instead manage it intelligently. A small investment of time in expert planning now can safeguard you from devastating financial penalties in the future. Remember this fundamental principle: the true measure of financial success is not merely how much you acquire, but how much of it you are ultimately able to legally retain. The fifth critical error: excessive disclosure of personal information. The acquisition of life-altering financial resources often triggers an overwhelming sense of excitement, which naturally encourages people to share their news. This is precisely where the greatest personal danger originates. You may feel compelled to celebrate, share news with close friends, post vague social media updates, or confide in acquaintances. However, this is a harsh reality. The instant the public or a wider network learns you have successfully exchanged and gained significant capital, you become an immediate and appealing target. You risk attracting scammers, predatory fake advisors, and even opportunistic friends or distant relatives. Your personal privacy must be protected as if your entire financial survival depends on it. Because it truly does. You must restrict the knowledge of your transaction to the absolute minimum number of people necessary and never, under any circumstances, disclose specific details. This includes the exact amount exchanged, the precise rate received, or the specific location where your funds are held. Posting photos of bank receipts, deposit slips, or bank account screens online is an act of self-sabotage. Genuine financial success often proceeds quietly. The less external parties know about your wealth, the higher your level of personal security will be. The sixth critical error: failure to protect and strategically grow proceeds. This represents the final, and perhaps most frequently overlooked error. The act of obtaining capital is fundamentally different from the long-term discipline required to keep it. Historical financial analysis demonstrates that sudden, significant wealth can vanish with alarming speed. Following a major exchange, there is a common, powerful impulse to spend aggressively, to purchase luxury items, acquire new homes, or immediately extend financial help to every person known. However, without a meticulously structured post-exchange financial plan, this new wealth can be dangerously depleted within a matter of months. The prudent course of action is multifaceted. Firstly, you must distribute your funds across a variety of secure accounts at different institutions. Consolidating everything in one place creates a single, vulnerable point of failure. Secondly, engage a licensed financial advisor who possesses verifiable, extensive experience in managing sudden, substantial wealth. Thirdly, impose a strict embargo on all emotional or impulsive spending. Allow yourself a mandatory period of reflection and analysis. A few weeks of guarded patience can eliminate years of potential financial regret. Construct a structured plan for investing in demonstrably stable, long-term asset classes, such as diversified real estate, robust bonds, or conservative professionally managed portfolios. Above all, maintain an easily accessible emergency fund that can cover at least 12 months of all living expenses. Now, let's transition to an equally vital component of this process: the necessary mindset required when the exchange day finally arrives. The revaluation event will transcend a simple financial transaction. It will be a major psychological and emotional challenge. You will witness a complete spectrum of human reaction: celebration, distress, frantic rushing, and outright panic. All forms of media will be saturated with overwhelming noise and speculation. It is paramount that you remain absolutely grounded and refuse to permit the widespread hype to dictate any of your decisions. The most successful investors are consistently the most composed. Prior to initiating your exchange, allocate a full day for calm reflection, thorough research, and final plan review. Every decision you execute must originate from a place of clear knowledge, never from an emotional reaction. In the financial domain, allowing emotions to control your actions is the quickest, most direct path to significant financial loss. This discipline is non-negotiable for long-term success. Another critical component of preparation is meticulous documentation. Before you approach any banking institution, ensure every single physical note, purchase receipt, and relevant piece of paper related to your currency holdings is perfectly organized. If your dinar or dong was acquired from an authorized, verifiable dealer, maintain all proof of purchase records, as banks may legally require this evidence. Furthermore, organize your currency notes neatly by denomination. A clean, orderly, and easily countable presentation streamlines the exchange process, significantly reduces stress for both you and the banker, and helps establish a relationship of immediate trust. Always, without exception, insist on receiving every offered rate, contract term, or proposal in documented written form. Never rely on purely verbal assurances. If a specific exchange rate is verbally quoted, request the official documentation before affixing your signature to any agreement. Upon exiting the bank, immediately and carefully verify all deposit slips, cashier's checks, or wire transfer confirmations to ensure the recorded amount is an exact match. Clerical errors can and do occur, and catching them immediately is exponentially less costly than discovering them weeks later. Next, we must address a factor most people overlook: security measures implemented after the funds are officially deposited. Once your capital is secured within a bank, you must establish multiple protective layers of security, implementing two-factor authentication, separating funds into distinct savings and checking accounts, and utilizing uniquely strong passwords across all platforms are baseline essentials. If the resulting wealth is substantial, initiate a conversation with your bank about their private client services or highly secure wealth management accounts. These services frequently offer superior levels of insurance, enhanced security protocols, and sophisticated fraud monitoring. Consider engaging the services of a fiduciary, a specific type of financial professional who is legally bound by law to act exclusively in your best financial interests. You must actively avoid any individual who attempts to pressure you into high-risk, unverified investment schemes or promises implausible, rapid returns. Your primary objective immediately following the revaluation is not to aggressively pursue further wealth accumulation, but rather to diligently protect and preserve the substantial asset you have already secured. While discussing protection, a crucial, often sensitive subject is giving. Many individuals hold powerful, admirable dreams of supporting family, friends, or charitable causes once the revaluation event transforms their financial status. This desire for generosity is commendable. However, generosity without carefully constructed, firm boundaries can swiftly lead to personal financial strain, deep regret, or even sophisticated manipulation. Before you commence any major gifting, you must develop a specific, quantitative giving plan. Determine the maximum amount you can safely share without jeopardizing your own long-term financial security. Establish clear, non-negotiable rules for all giving. You must not permit guilt, emotional obligation, or external pressure to dictate the control of your assets. The overarching goal is to wisely bless others while simultaneously protecting the integrity of your own financial future. Let us quickly reinforce these 6 paramount mistakes one final time, as repeated exposure helps solidify the knowledge. Number 1, the impulsive act of rushing into the exchange too soon. Number 2, the dangerous error of trusting unverified sources. Number 3, the crippling liability of having no pre-exchange plan. Number 4, the costly mistake of ignoring tax and legal requirements. Number 5, the security risk of talking too much about the transaction. And number 6, the ultimate long-term failure of not protecting and growing the money afterward. By consciously avoiding just these 6 pitfalls, you will already be strategically positioned far ahead of the vast majority of people when the revaluation begins. Understand that the RV is not merely a single transaction, it represents a profound financial transformation. It is the culmination of years of waiting, diligent research, and necessary patience. However, the actions you take or fail to take during those crucial first few days will be the definitive factor determining whether your future is characterized by stable success or disruptive chaos. Do not perceive this moment as a frantic, emotional race against time. Instead, approach it as a rigorous test of your discipline and preparation. The individuals who truly succeed will be those who remain disciplined, highly organized, and exercise consistent wisdom. Your success does not hinge on being the very first to exchange, it depends entirely on being fully and professionally prepared for the complexity of the process. Therefore, when the live screen finally displays the changed rates, when the numbers you have diligently awaited are finally confirmed, you must not permit the sudden rush of adrenaline to dictate your choices. Allow your accumulated knowledge and planning to be your sole guide. Maintain your composure, project quiet confidence, and conduct your entire exchange process with the professional discipline of an executive, not the recklessness of a gambler. You have committed years to this pursuit. Do not allow a single, momentary error driven by excitement to invalidate all your disciplined waiting and preparation. If you have stayed with this broadcast until this point, it is a clear indication that you are absolutely serious about comprehensively protecting your financial future. This mindset is the single most important factor that will determine your eventual success. Always remember this fundamental truth: real, enduring wealth is not defined by the sheer magnitude of the money you acquire in a single event. It is measured by how effectively and how wisely you are able to retain and manage that capital over the long term. As the revaluation approaches, commit to continuous learning, dedicated preparation, and relentless control over your emotions. This concludes today's detailed segment on your future security, the 6 essential Dinar and Dong exchange errors you must proactively avoid. If you found this information valuable and grounding, please take a moment to engage with this content. Like, comment, and subscribe to Dinar Shift for more factual, down-to-earth updates designed to keep you informed, secure, and fully prepared. Our mission is preparation, not speculation. When the moment of truth arrives, only the calm, the informed, and the disciplined will be positioned to truly benefit from the opportunity. Remain wise, stay grounded, and never forget that the ultimate reward is not the money itself, but the maturity and wisdom with which you handle it.